Joining us for more on this and the energy stories, Helima Croft, head of global commodity strategy at RBC Capital Markets. And the question, Helima, there's clearly no quick resolution to this war in Ukraine, is how much longer we are going to see these sky-high prices.
I mean, Sarah, the clear concern is we have India banning exports. Are other major exporters going to follow India's lead because they're concerned about their own domestic economic situation? And the situation with Ukraine is obviously a grave concern to anyone who's concerned about global food security. You had the German foreign minister out this weekend saying 50 million people in the Middle East and Africa are facing hunger if we cannot unlock the grain supplies out of Ukraine. Russia is not allowing Ukraine to export through southern ports. There are reports that they've actually mined the harbors as well. So there's real concern that if we cannot move Ukraine's cargoes, this food situation is going to get much worse.
And prices are just going to stay elevated, keep going higher? What's your forecast?
The thing to watch, Sarah, is, again, I say this on energy as well, is, what happens in this war? If we were to get some type of resolution, if the Russians were to agree to allow exports to flow through the ports, that would certainly bring prices down. But there's no indication that we're looking at a situation of an off-ramp. It looks like we're in a protracted stalemate right now. So that's going to continue to put pressure on food prices, on energy prices. And the grave concern really would be, Russia is the world's largest wheat exporter. What if Russia started selectively cutting off supplies?
Yeah, is that priced in at all at this point?
I don't think a Russian export cutoff is necessarily priced in, but that would be, again, the really big concern. Russia benefits financially now because Ukraine is essentially shut in. You have India moving to restrict their exports. The economic beneficiary of that is Russia at this point.
Yeah, no, the protectionism is interesting. I think Indonesia banned palm oil exports as we continue to see these shortages. So what about crude oil, Helima, which is up another 3%? We're almost at 114 again for WTI crude.
Yeah, the thing to watch, Sarah, is, what happens with the potential European embargo. That's 2.2 million barrels of Russian exports that could be potentially locked out of that market. Would other countries like India be able to absorb that much additional supply? India has really ramped up their imports of Russian oil. It's selling at a significant discount. And that raises a question of, are we actually going to see also at some point secondary sanctions, Iran-style sanctions, which would make it difficult for India, for Turkey to continue to absorb that many additional Russian barrels? But certainly, I think the market is very much looking at what the Europeans do this week.
What about demand, though, Helima? We just had a debate at the top of this program about whether we're going into recession. Clearly, things are going to slow down. That's what the Fed wants. They're trying to slow things down, and so are other central banks around the world. How does that factor in? Could that put pressure on these prices here of energy and agriculture if there's just less demand? China's still in shutdown mode.
I think, Sarah, the story in China with lockdowns, that has been what has basically put a cap on oil prices. Certainly, if these lockdowns persist, over the summer, I think that will be, one of the factors that means that we don't necessarily retrace the highs that we saw earlier this year. But if we were to see lifting in lockdown restrictions in China, Chinese demand was already very muted. If we were to actually see any lockdown restrictions, removed, I think that would actually be a catalyst to move actually higher. We're in single decision maker dynamics in terms of this Chinese lockdown. So I'd pay attention very closely to the trajectory of those measures.